Kathy, we did see a fairly average-looking GDP read out of Japan today. When do you see a rebound potentially happening? How long is this situation going to endure? Is it just impossible to say at the moment?
Yeah, I mean, we were assuming or have been assuming that the rate of change in new infections would peak sometime in this current quarter. But just given how quickly and broadly the coronavirus seems to be spreading globally, obviously a lot of people are now questioning, that assumption. And I think, as you pointed out, a pretty dismal fourth quarter GDP revised estimate this morning, down 7% Q&Q annualized. But I think the greater focus now is on this current quarter of January-March 2020 and how deep is the kind of downturn and slump going to continue into this quarter. So a lot of people, not surprisingly, talking about the risk of a technical recession here in Japan and, of course, the broader implications thereof on earnings and, of course, the market. I think that's what we're seeing in the market's correction over the past several days, and particularly this morning.
Indeed, and the Nikkei off more than 6% right now. So what's your outlook for the Nikkei and the topics in 2020?
So again, at this juncture, our global macro team is not forecasting a global recession. And of course, a lot of that is pinned on the assumption that the U.S. in particular will not enter recession as a result of this virus situation. So if we stick to that assumption, we think that, of course, the conditions within Japan will remain quite difficult for the time being. But we think that eventually there will be a bottoming out in earnings revision momentum, and the market can trade higher towards the end of this or to the second half of this year. But again, everything is so fluid at present. I don't think anybody has a real crystal ball that's accurate enough to predict when the situation is going to peak out globally. So, of course, right now there's a great deal of uncertainty. People are trying to hide in safe places, not just in Japan, but globally.
Kathy, is market pricing policy failure? We had Deutsche Bank coming out to say that central banks globally have, no tool to fight the coronavirus.
Well, I think central banks, are trying to do what they can do. And, of course, there are some with some wherewithal like the Fed and others with very limited cushion like the Bank of Japan and the ECB, in our view. Having said that, I think in Japan's case in particular, the onus of additional stimulus is not going to fall on monetary, in our view, but much rather on fiscal spending. And in addition to the very large stimulus package that the government passed late last year in Japan, we believe they're going to augment that further with a supplementary budget for fiscal 20, most likely aiming at, for example, support for small, medium-sized enterprises, maybe even some support directly to the household sector. But I think at this juncture, a lot of that stimulus burden is going to be falling on the fiscal side. So I would argue, correct your statement vis-a-vis monetary policy with respect to Japan, but I think there is some more leeway regarding fiscal. And, of course, if you can issue debt at a cost of zero, then it does also make more sense to do that now.
And Kathy, taking a look at Japan, I mean, not too long ago, we were talking about how the yen was no longer a haven play, but today, of course, it's strengthening more and more. Taking a look at this flight to safety chart that we have on the yen, how will that impact Japan's growth going forward? We saw fourth quarter GDP coming in below expectations just today.
Right. So that is a factor that, of course, the authorities here are paying very close attention to. Obviously, what's happening globally with the Fed beginning to cut rates again, with central banks everywhere cutting rates, with what's happened to the oil market in the last 24, 48 hours, it has, of course, raised a lot of concerns that it's not just a temporary slump globally, but we may be heading into something more, drastic, which is, I think, what has been priced into the Japanese currency. I think from a Japan perspective, having said all that, 103 is of some concern, but I think what they're most worried about is if the rate crosses the threshold of 100 to the dollar and stays there for a prolonged period of time, that's when I think they really begin to get very concerned. But frankly, at 103, and we're actually assuming 105 in our top-down earnings forecast for Japan, I don't think it's a point where they're hitting the panic button quite yet, but of course they're going to be monitoring the situation extremely carefully because, of course, yen strength does convey a slight deflationary shock to the economy.
Kathy, if we can look for a silver lining, perhaps, there's a very strong yen, there's a very weak oil price, Japan's a net energy importer. Is that at least going to cushion some of the shocks?
I think so. I think there are definitely some some industries that will benefit from lower energy prices, and of course they will benefit. But overall, Japan is, at least in the public market space, quite geared to the global cycle. So more deflationary winds blowing into Japan from abroad is definitely not good net for the country. So I think we do need to see some stability in oil markets, and we do need to see some stability in this whole coronavirus situation for people or global investors to feel comfortable about investing in this market once again. When you say silver lining, though, I think there is, if you think about what this could do in terms of, for example, share buyback attitudes, or for companies who have listed subsidiaries who have been looking to buy in those listed subsidiaries but felt the pricing was too high. In fact, this may prompt more restructuring and consolidation, which we believe is much needed in Japan's industrial structure. So that may be something to look forward to as we proceed for the course of the remainder of 2020.